All of these banks understand exactly what they're doing with inflation, and they understand exactly what gold is. But in order to kill that bird, along with all of the other birds relating to this new settlement status that the BIS is behind the most powerful bank in the world, it's setting the stage for a massive gold revaluation, which will not only allow you, as you've said many times, to survive, but also to potentially thrive. If I'm right, those few people who are holding gold will thrive. And when we talk about silver, look, let's not ignore silver. We'll talk more about it, but it is being wickedly accumulated by countries like India. I wouldn't forget about silver. It is not a tier one like gold, but it is also something that I believe should be characterized as strategic. And we're on the cusp of some very big things. And I think gold and silver and the dollar, those three things that we focus on, will have a profoundly different view. All three will, in the coming months ahead.
In today's news recap, your silver to the moon. Continuing inflation may be crippling consumers, but it is doing wonders for giving silver back its luster, with the precious metal gaining over 34% in the past 6 months. In late May, silver hit its highest point in 12 years. Maria Smirnova, Senior Portfolio Manager and Chief Investment Officer for Sprott Asset Management, says silver has been playing catch up to gold's rally, while gold has been running for longer. In terms of percentage gains, the safe haven metal has only advanced 17.6% in 2024, to a peak of $2,440 in May. Smirnova says both metals have been buoyed by the prospect of easing monetary policy in the U.S., rising geopolitical turmoil in the Middle East, and central bank buying, particularly from China. Silver faced several headwinds in 2023, most notably rising interest rates and slower economic growth in both the U.S. and China. She says, while the physical silver market was robust in 2023, Western investment demand was tepid, with silver bullion ETFs shedding approximately 50 million ounces during the year and representing more than 6% of holdings. Looking ahead, we expect silver prices to continue to improve, driven by low interest rates, more robust physical ETF purchases, and increased industrial demand. The Silver Institute sees silver demand rising 2% this year because of its dual purpose as a key element in the clean energy transition. Now we'll show you the best clips of the latest interview, but first hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps, and check our description for more info and full vid credits. Enjoy the episode.
Times over the last few months, it's now becoming a reality. And it's you need to understand, you need to listen to the verbiage here in the statement, because it's the exact same thing that they understand with the commodity markets. And this is why we're seeing so many deliveries. And I'll answer this question in a moment, but just like we're seeing all of the gold heading to Hong Kong. Remember, the CME Group created a contract in 2015 that allows for exchange for physical to be delivered to Brinks, Hong Kong, which is a COMEX vault, and they only keep taking kilo gold bars. Ironically, no, it's not, because the Shanghai Gold Exchange trades in kilo bars. The COMEX trades in 100-ounce bars, although their mini contract is kilo bars. So when you see, 500 plus million in gold delivered to Brinks, Hong Kong in an exchange for physical, that's being trucked over to the Shanghai Gold Exchange. They are using the suppression of the Western market against us and standing for delivery. We just saw the other day another huge delivery coming out of the June contract for gold. It was 30,000 gold contracts were delivered off of COMEX in the June contract, 30,000 times 100 ounces. We continue to see drawdowns in the exchanges because the world understands this is how they win the game. The countries that are standing for delivery now never did. It is the standing for delivery, the coordination, sophistication, wealth, being cunning enough and understanding enough to understand this is how you beat the West, by standing for delivery in these exchanges. Well, the same thing would be true in respect with the BRICS Grain Exchange. And I'm going to read something to you here so people understand, they get what's happening. And they're using this leverage against us. They say the BRICS grain exchange is likely to change the face of the world grain market tremendously. And this is according to the Russian officials. The existing global grain market infrastructure was formed following the Second World War when U.S. wheat and corn exports dominated the market, the ministry said. Although U.S. exports no longer play the role they used to, global prices are primarily determined by the Chicago Commodity Exchange. Moscow seeks to move away from trading grain for U.S. dollars in favor of the national currencies of the BRICS member states. The ministry insists that the BRICS countries are the largest grain producers and exporters, but have no leverage to influence the price of the agricultural commodities critical for their food security. The BRICS Commodity Exchange will solve this problem. But this is the point here. The same thing will be true. Look, they now have a commodity exchange, which would be for things like corn and soybean and wheat. Well, you know, what's Brazil doing right now? They're the second largest exporter of corn in the world. They're selling corn and soybeans to China for yuan over the Project M Bridge, sidestepping SWIFT and probably sending that yuan back and converting it into gold on the Shanghai Gold Exchange. Probably those same kilo bars that came off the COMEX. So they're doing that. But what did China do? They bought the LME, the London Metals Exchange, the base metals, right? We've talked about how all of the countries joining the BRICS or the Shanghai Cooperation Organization or the Belt Road Initiative are massively rich in commodities, right? So they're buying the LME, which is base metals. They're draining the exchange in precious metals. And by the way, the LME, which the Chinese own, even though the exchange is in the UK, they're now building warehouses in China to warehouse the metals that are traded on the LME in China. So they're knee deep in base metals, copper, zinc, all that kind of stuff. They are building a grain exchange. There was a report that JP Morgan just came out with, said that they produce 70 to 80% of all the rare earth metals, but they refine 100% of all the rare earth metals. So you got that base covered. They came out and said that this new BRICS endeavor those countries that will be admitted in October will be very strategic in terms of their shipping lanes and their trade routes on top of their natural resources. Do you see how all of these ducks are being, put in a row, one after the other after the other? And what did Zoltan Pozar say? Oh, that's right.
In today's market recaps, a silver price analysis, silver continues battling higher within descending channel. Silver is recovering within a falling channel. It has met tough resistance at the level of the 50 and 100 period SMAs on the 4-hour chart. There are bullish signs, but a breakout of the channel would be a prerequisite for a more confident stance. Silver continues recovering within a descending channel. The precious metal found support at the June 26th and 13 lows around 26.88. Its first attempt to break above the cluster of moving averages in the mid-2940 failed, but after its pullback on July 1st, it has started creeping higher again. It is now debatable whether silver is still in a bearish short-term trend, which means there is no longer a downside bias. However, it is in a falling channel, which does add a bearish tone to the charts. If silver continues recovering and breaks on a closing basis above the 50 and 100 SMAs, however, it would indicate a continuation higher to the upper channel line at around 29.90s. This would be a critical crossroads for the pair. It is also a major resistance level at the top of a 4-year consolidation zone. A decisive break above would indicate the start of a new short-term uptrend. Silver temporarily broke out of the top of the falling channel on June 20th, and although it quickly fell back, the fact it breached the integrity of the channel, albeit temporarily, indicates the upper channel line has been weakened and is more likely to give way again. This also adds a slightly bullish note to the charts. Now we'll show you the best clips of the latest interview. But first, smash the subscribe button, hit the like button if you like our recaps, and check our description for more info. Enjoy the episode.
The head of the Dutch National Bank said, our balance sheet is going negative, but I really don't worry too much about it because we have the gold and the gold revaluation account. And although we can't use it as an asset against a liability, we know it's there. Now, basically first of all, let me clarify. Gold held in central bank balance sheets is called the gold revaluation account. It's in the gold revaluation account. which is a very interesting name for an account for which they hold all of their gold. What Roosevelt did over my shoulder, he revalued gold by devaluing the dollar. And I find it interesting that so many of these central banks are accumulating gold at the level that they are, along with accumulating so much debt at the same time. Massive amounts of debt, massive amounts of gold accumulation. And there's one other piece, and that is, 30 countries or so who have repatriated their gold from the epicenters of usually considered safety. That would be the Bank of the Federal Reserve Bank in New York and the Bank of England, which would by proxy give access to the COMEX and the metals exchange in London, the LBMA. And if you think about it, I mean, now that we've been told that the new unit currency, which is the BRICS default currency, which it looks like they are going to run with, according to Delma Rousseff, the head of the BRICS New Development Bank, realizing that Project Enbridge is the vehicle by which they'll trade. And who's part of the Project Enbridge? The Bank of International Settlements. What did the Bank of International Settlements do? Oh, that's right. They reclassified gold as the world's only other tier 1 reserve asset. Now, follow me here. It would just seem likely to me that all of these countries who have been told not only to buy gold, and if you go back to 2017, as we've talked about, these banks have been massively accumulating gold, copiously so, for the past 8 years or so, and maybe longer. And or 7. Anyways, but repatriating their gold is just as big of a deal. We talked about India buying 1.5 times the amount of gold that they bought in all of last year, just in the first 4 months of this year, and repatriating it. All of the countries bringing their gold back from the New York Fed, including Saudi Arabia, who is a full participant in Project Enbridge. Now, follow me. I'm coming full circle with this. So you got a new system that we are being told will be tied to gold by 40%. And that will be the unit currency. And I suggest everyone even just go to the website, the unit website, and read their white paper. And then you have a new settlement platform, that being Project Enbridge, that will sidestep the SWIFT. So the unit is the settlement currency. Project Enbridge is the vehicle where each country can trade their own autonomous central bank currencies, having their own monetary policy, and yet settling in a common reserve currency. All of this points to lack of ownership in treasuries and accumulation in physical gold. If you read the white paper on the unit, it allows for each country to hold their gold in their own sovereignty, in their own borders, and have it audited, independently audited. This is why they're all bringing it home, because you can hold your gold according to the this new currency settlement, the unit, in your own borders, right? But it has to maintain this strict protocol and be audited. All right. So all of these countries accumulating gold at the same time, they know what's coming, so they're accumulating wicked amounts of debt, right? What did the guy say, the head of the central bank say for the Dutch National Bank? Oh, yeah, we're okay because we got the gold in the gold revaluation account. Kind of slipped there, right? So you think all of these countries going deeper and deeper, deeper into debt. At the same time, they're buying more and more gold and bringing it all home. Bang, they revalue gold. Just like that. There will come a time where they revalue gold and gold skyrockets, making their balance sheet from putrid to solvent, just like that. Because right now, the gold held in that gold revaluation account is not able to be counted as an asset against a liability. If they revalue it and change it to where it is now an asset on their balance sheet, everyone's balance sheet goes from upside down to perfect. Gold is now an asset that can be held in your own borders for the new unit currency traded on the Enbridge. Do you see how this becomes very serious very quickly for the settlement status of the dollar and the reserve status of the bond market? And when you talk about little by little by little by little by little by little, and then someday all at once, it is so clear that it's in front of us, yet no one's really putting all these dots together. To me, it makes great sense. And they understand what inflation does. They understand that the inflation is out of control. They get it. The money creation has been off the charts and continues through brain dead, irresponsible fiscal policy, creating $1 trillion every 100 days, and probably a lot more than that. And that's just the U.S. Everyone is doing the same thing. And so the point of it is there is an answer. Keep buying gold, repatriate it from all of the centers where it used to be held, so you had access to the LBMA and the COMEX. Now you bring it home because it will be part of a new settlement currency that you keep in your own sovereignty that will be audited independently, but gives you the ability to sidestep SWIFT, be free from sanctions. You put it all together, it kills all these birds with one stone, and the BIS is behind it. The same entity that revalued gold to a tier 1 asset.
What do you think of Andy Schectman's take? Will the East versus West war end up in a massive gold and silver price squeeze? Will the dollar collapse in 2025 as the BRICS nations take over? Share your honest opinion in the comments section down below. Send a super thanks if you find our recaps valuable, and make sure you see this video right here because it's a perfect fit for you. I see you on the other side.